Good morning, guys. It's Tuesday, March 25th, 5:33 a.m. Central Time. Grain markets are a little bit lower this morning. May corn futures down 1.5 at 463. May soybeans down 4.25 at 1003. May Chicago wheat down 1 at 547.25. May Kansas City wheat down 4 at 574. May spring wheat is down 1 at 591.25. Mackenzie, I'm still sick this morning, which means that I don't sound great. So I apologize, guys. If I say something stupid, it'll be just like any other day. Let's start off with this shipping fee story.
An Indiana soybean farmer testified before the U.S. Trade Representative regarding its investigation into China's shipbuilding industry. Mike Cohn, a director for the American Soybean Association, highlighted the crucial role of maritime commerce in soybean exports. While the Soybean Association supports efforts to expand domestic shipbuilding, Cohn warned that the USTR's proposed measures could unintentionally harm soybean farmers. The plan would increase shipping costs for U.S. soybeans and soy products, making them more expensive and less competitive on the global market. The Soybean Association is urging the USTR to work with domestic industries to strengthen U.S. maritime trade without harming agriculture.
National Corn Growers had something similar out yesterday. The president of the National Corn Growers Association yesterday, asked the Trump administration to grant exemptions on bulk shipments for America's commodity groups as it considers implementing fees. Illinois farmer and NCGA president Kenneth Hartman Jr. said this: corn farmers are currently facing numerous challenges in the farm economy, including rising input costs, volatility in commodity prices, and stagnant market access opportunities. Adding further financial strain through higher transportation costs could result in more instability for our members, particularly those who depend on global export markets to remain competitive. So this is a big deal. The American Farm Bureau Federation last week estimated that Trump's proposed shipping fees could translate to an increase of 9.5 to 27.5 cents per bushel of soybeans on the export market, making us less competitive. I was misinformed slightly, or actually by a lot, last week when I talked about Chinese vessels versus U.S. vessels. The American Farm Bureau Federation had some absolutely fantastic charts out on this that I'll show you here today. Here's share of shipping equipment produced in China. Global maritime container inventory, China's 95%. Global intermodal chassis inventory, China's 85%. Global commercial ship order book in 2025, China is 53%. Here's China's share of annual global shipyard output. They're at 53%. And here's the U.S. deadweight tonnage capacity of U.S. built ships by year of construction. And we're basically at zero. One statistic that I found said this: China controls a global fleet of more than 5,500 commercial vessels used for trade, while the U.S. controls around 100. 5,500 in China to 100 out of the United States. So this shipping fee plan is a terrible idea. This will really, really hurt our export program for soybeans, for corn, for wheat, for a number of other things too. And it's not just the ag industry that's going to be affected by this. I mean, it's a lot of industries in the United States. So I don't know. I don't personally love the idea. I get what Trump's trying to do, but I don't like it. And I hope that we can get the exemptions that we need.
The forecast for Russia's wheat crop has improved. Russian consulting firm ICAR has raised its baseline forecast for this season's wheat crop to 82.5 million metric tons, an increase of nearly 2% from its previous estimate. The group's projections for the crop range from an optimistic estimate of 86.5 million metric tons to a more conservative forecast of 78.5. The increase is attributed to improved growing conditions in the south central region of the country. However, the condition of the crop in the Volga region remains uncertain.
This was seen as being bearish, the wheat market yesterday, because the crop in Russia just isn't that bad. Russia is projected to be, according to USDA, the fourth largest wheat producer, and they will be 10.2% of global production. So whether it falls at 78 or 82 or somewhere in the middle, they're going to be the fourth largest producer. They are the top exporter, or will be this year, 21.6% of all global exports. So if the Russian crop isn't that bad, that means more exports for Russia and less exports for the competition, United States included.
U.S. negotiators and Russian officials met in Saudi Arabia on Monday to discuss a potential 30-day ceasefire in Ukraine. The talks followed a separate meeting between U.S. and Ukrainian representatives the day before. While Russia and Ukraine tentatively agreed to a ceasefire last week, both nations continue to attack each other. Ukraine has signaled openness to President Trump's proposed full 30-day ceasefire, but Russia maintains that a complete halt to fighting will only be possible if arms shipments to Ukraine stop and Ukraine suspends its military mobilization. Meanwhile, China has denied reports that it plans to send peacekeepers to Ukraine, reaffirming its neutral stance on the conflict.
This again is seen as being a bearish wheat story. They're talking about a ceasefire, although it seems very messy. As I've mentioned before, I don't quite comprehend the concept that a ceasefire is bearish because Russia's been shipping wheat, Ukraine's been shipping grain. I don't really know what's going to change, but that's the perception at least.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Chris Barron joined me yesterday for a farm budget mailbag. Chris is a farm budgeting expert. He's been doing it for decades. And we took questions from premium subscribers, and the questions were absolutely fantastic, super topical, absolutely stuff that would apply to you guys. We talked about equipment budgeting, which machinery and equipment is a huge line item expense for you guys. And I don't think most people budget for it correctly. And Chris has what I would say is it's not simple, but it's a really fantastic approach to doing it that he discussed. We talked about side hustles. We talked about off-farm income. This was part one of a two-part video. I guarantee, guys, there's absolutely something in here that will apply to you and maybe make you think about the way that you're budgeting. And in this sort of razor-thin environment where there's little to no margin involved in farming, budgeting is paramount. It's extremely important. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. We offer a $50 per month subscription. It includes our morning email, which goes out at 5 a.m. Central Time every single business day. That includes headlines, charts, graphics, our 6 most recent premium videos. All of my cash grain marketing recommendations are included. So if you're seeking to simplify your grain marketing this year, this might be a good thing to take a look at. I offer cash grain marketing recommendations. I don't really do like fancy option strategies or anything complicated. It's just cash sales broken down by crop year and percentage. Everything's tracked every single business day. You might want to give that a shot and just kind of maybe get a different view. $50 a month. You can sign up on your phone. It takes about 30 seconds. Everything is super easy to access on your phone. The videos are one click to play. There's no messy login instructions. I know you guys are busy, but this is something you can absolutely listen to or watch while you're in the truck or in the tractor. So check that deal out this morning, guys.
The U.S. and Russia held discussions on Monday about reinstating the Black Sea grain deal. Russia claims that the July 2022 agreement failed to fulfill certain provisions, particularly those related to its interests. The agreement was meant to facilitate the safe export of grain from Ukraine across the Black Sea despite the war. However, Russia withdrew from the deal back in 2023, citing significant barriers to its own food and fertilizer exports. Although Russia's exports are not facing major issues, Moscow has argued that restrictions on payments, shipping, and insurance have made trade more difficult. A joint statement regarding the outcome of the discussions is expected to be released today.
Also considered to be bearish the wheat market, which I don't quite comprehend. Wheat's just trended lower for a long time. I thought I had a wheat chart this morning, but I guess I don't. We've been stuck in like, you take a look at the May Kansas City contract. We've been stuck in a dollar trading range for like 9 months, and we go back and forth in this thing. And every time one of these headlines comes out, we kind of sell off, and then maybe you'll get some sort of crop scare story and you'll rally back. There were a couple states or a few states out with winter wheat ratings yesterday. USDA doesn't do national ratings until April 1st, I believe. The Oklahoma crop was rated 37% good to excellent. It was down 9% on the week, but the Kansas crop was improved to 49% good to excellent, up 1% on the week. I would kind of take those ratings with a grain of salt this time of year.
The outlook for Brazil's soybean production has been revised lower. According to well-followed private group Ag Rural, this season's crop is estimated at 165.9 million metric tons, a 1.4% decrease from the previous forecast. The revision is due to drought conditions in southern Brazil, which have adversely impacted crop yields. Despite the cut, Brazil is still on track to produce a record soybean crop, driven largely by a projected record harvest in Mato Grosso. Ag Rural also reported that as of late last week, Brazilian farmers had harvested 77% of the soybean crop, up from 69% during the same period last year. Meanwhile, the planting of Brazil's second corn crop, has been completed.
Okay, so you're talking a little bit lighter crop in Brazil, perhaps. Just because Ag Rural came down doesn't mean CONAB has to come down or USDA has to come down. Maybe they do, but now you're talking slightly reduced estimates out of Brazil and also Argentina. yet the soybean market is trading near the lower end of what's been a 3-month trading range. So I don't know. I guess I know that Brazilian soybeans are still competitive versus the U.S. on the export market. They're just cheaper, as they typically are this time of year. Maybe this is an underlying supportive issue, but I mean, hasn't really resulted in any sort of soybean price strength.
Brazilian recession fears appear to be exaggerated. According to Bloomberg Economics, the nation's economy is slowing due to elevated interest rates, but the chance of a recession is unlikely. In February, Bloomberg's recession model showed just a 10% chance that the economy was shrinking. While rates are effectively cooling inflation, their delayed effects are still unfolding. Last week, policymakers raised interest rates by a full percentage point for the third consecutive time, bringing rates to 14.25%. Brazil's president is facing growing criticism as rising prices make life harder for Brazilians, putting his re-election prospects at risk.
A recession in Brazil, if it were to occur, could have a number of implications. Soybean production would probably see a very minimal impact if you saw a recession. The one thing that you might see in Brazil, excuse me, if there was a recession, would be reduced domestic demand, which means that maybe they produce the same, but the domestic demand for soybeans is reduced, and therefore there are more soybeans available for export, which is not necessarily a good thing. Now, there could be some currency implications as well, which has been a big deal for Brazil, but you'd probably rather not see Brazil in a recession, I don't think.
U.S. corn shipments declined last week but remained strong. USDA reported that 58 million bushels of corn were inspected for export during the week ending March 20th. The print was down 14% compared to the previous week, but up 17% versus the same week last year. Soybean shipments were reported at 30 million bushels. The print was up 25% from the prior week and up 4.7% compared to the same week last year. Wheat shipments surpassed pre-report expectations at 18 million bushels. The print was down 2.1% from the previous week, but up 12% versus the same week last year.
Pretty solid numbers across the board. Everything, corn, soybeans, wheat, better than the same week a year ago. Traders, and you probably include me here. I'm not a trader, but I'll agree with this sentiment. USDA, I think, is understating corn exports. Some people at the same time have said that they're overstating feed demand, given the lower cattle numbers and some stuff in the poultry business. So I don't know exactly how the balance sheet's going to wind up. I think the carryout estimate for corn at the end of the day could be a little bit lighter than USDA is let on. We have a grain stocks report on Monday along with the acreage report, which could provide some insight into that. What did cattle do yesterday?
Cattle futures were mostly lower. Live cattle were 15 cents to 105 lower. Feeders were 30 cents higher to 40 cents lower. Box beef was higher. Choice was up 165 at 327.10 and select was up 396 at 313.58.
Stock market's mixed this morning. Bonds are off a little bit. US dollars a little bit lower. Crude oil is just a little bit higher. Pretty quiet. Have a great day, guys. We'll be back on Wednesday.